recording. Yeah, kind of like I was gonna say, I'm gonna try my best to put everything that's inside the guided bootcamp in these 5 days. You know, it's very difficult because the guided bootcamp is split in 3 ways. We got beginner, full guided bootcamp, and then psychology. So I'm gonna try to make everything as much as we can every single day, right? So let's get right into it. You guys can hear me all good. Audio's not too loud. Is it perfect? Type 1 if yes, type 2 if no. We're gonna hit it with some IML techniques right there. There's some IML. If anybody was on IML Zooms, you guys know what that is. They say, oh, if you guys agree, type 1, type this. There was no IML, please. All right, perfect. So first things first, we're not gonna talk about entries. We're not going to talk about take profits, stop losses, entry signals, risk to reward, none of that stuff. We're going to start from the beginning when you first come onto a chart, right? So first things first, when you come onto the chart, I highly recommend you guys, you have it exactly how I have mine. If you don't have it like mine, it's going to be very hard to see the charts how I do. You guys see how that's a very simple analogy or explanation. You're not going to be able to see the charts as clean as I do if you don't have your charts as clean as I do. It's very simple. I actually hate having these lines here. I usually have them all the way white. But if I were you guys, I would 100%. And when I did this with the live students on the 30-day bootcamp, I literally told every single person, like, I'm like, share your screen, let me see your charts. And then the moment they completely change their charts to these candlesticks, these wicks, this background, everything changes because whatever I'm posting, whatever I'm explaining, you're going to see the replica of it on your chart. They say you have a black background or a dark gray background with green candlesticks. It's just not the same. You're just not seeing the same thing that I'm seeing. So first things first, I recommend you guys get your chart, put a blue body, put a red body. The borders are black. The wicks are black. When it comes to the scales, no, it's an appearance. We don't need these grid lines. Personally, I think they're so pointless. And you can literally see how this just looks so much more cluttered. It just looks terrible. Like you can't even, I don't even know what I was looking at. You take it off and then immediately you see how now you're just focused on price action, which is what we're going to go over. So that's first things first. We don't need a watermark. If you're a trader, you know exactly what you're looking at by just looking at it. You don't need to constantly be reminded of this thing right here. If you have this thing in the way, it's kind of in the way. You see how you can't notice this clean level of support, resistance, support. So you wouldn't be able to identify it that easy because you have this in the way. Versus if it's not in the way, it's a lot easier to see it. So if you want to see the charts good, you got to see the charts good. So you can't have things in front of the charts. So first things first is chart hygiene. Get your charts looking like mine. White background, candlesticks, and then the EMA. I personally have the 50 EMA. The source is closed, offset is 0. Style, it's like this, visibility on all time frames, but honestly I don't really need the EMA. It's just simply an added confidence on my charts. I really don't use it for anything else. So that's that. Is everything clear? Type 1 if yes, type 2 if you guys need me to touch over something else. Perfect. All right, cool. So first things first, the time frames that we're going to be trading. So I want you guys to understand, I'm going to try and build, because I have a full-blown trading plan. I have a checklist. I don't have it manually in front of me. That's something that I think I'm going to come out with next year. I'm just going to give it out to you guys. It's going to be a full-blown checklist. So whenever I take a trade, let me see if I have any pair around here that has it. I'll show you guys right now. Let me see if I've taken any trades that have the full confluences. Yeah, okay, there's none. But I'm going to show you guys like a little bit what it could look like. So this is my, I don't know, let's just go February 2021. I'm just clicking around the month and let's go to here, Euro JPY entry. So this right here, there's a reasoning behind all of this. There's a reasoning behind these time frames in sync. There's a reasoning behind this. Everything, like, this has a meaning, and it has a percentage towards your grade, right? Because when you have a trading plan, you want to, like, the ideal thing is you want to grade your trade. So we grade our trades A, B, C, D, F. Obviously, you're only trying to take A or B trade setups. You can take C setups. There's nothing wrong with it. You just have to you have to understand the risks behind it. You have to be like, shit, well, if this is a C setup, I shouldn't be risking 2% of my account. I know the probability of it going my way isn't that high. I shouldn't take it. And more times than not, they won't play out. The times that do they play out, cool, but you know the probabilities of it going that way, right? So the first things first, when you go to build your trade setup, you need to understand, what are we doing? Are we bullish or are we bearish? But not, are we bullish, are we bearish on one time frame or on two time frames? You need to understand, where are you in the market as a whole, right? So these are all of the time frames that I use. I use the monthly, weekly, daily, 4 hour, 2 hour, 1 hour, 30 minute, 15 minute. I don't use any other time frame other than these. And every single one of these time frames has a very strong purpose and meaning behind it. So take a screenshot. I see a lot of you guys writing it down, which is fire. So write it down, take a screenshot, do whatever you got to do. I only have these time frames, and I'm going to explain to you guys why I have these time frames shortly. So I'm going to let you guys take a screenshot. Bro, what the fuck is that? So many notifications. Sorry, guys. 1 second. Let me just mute it. All right, cool. All right. All right, cool. So first things first, let's see, should we do, all right, look, let's do this. We'll do a full top-down analysis on this trade, and I want to see if you guys know it, and then I'm going to explain to you guys why we do certain time frames, whatever, right? So AUD JPY, and with the guided bootcamp, I break down these trades every single Sunday. So this is my watch list for this week. These are all of the pairs. So listen to this. These are all of the pairs that I'm actively watching. Doesn't mean that I'm trading them. These are the pairs that I'm going to be watching for the week, and I'm going to wait for them to give me the highest probability trade setup in order to take the trade. So as of right now, it'd be 1, 2, 3, 4, 5, 6 pairs that I feel can give me a B setup or an A setup or a C setup. And I write down exactly what I'm waiting for within all of these trades. It's probably why you guys see this right here. And then we'll get into that. We got plenty of time for that. Like, no rush. I just want to make sure you guys get one thing at a time. So first things first, when you get into the market, is what are we doing? Are we bullish? Are we bearish? Are we in the middle? Are we at the high? And you got to understand, where are we within every single time frame. I have no idea of a B, or C. I would figure that's exactly what we're going to make sure you guys get. So don't worry. By the end of this, I'm telling you, I'm going to try my best to get you guys to maybe not 100, but to like 85, because you got to like keep seeing it again and again and again, right? So what if you're a day trader, not a swing trader? Yeah, with this strategy, you could swing trade, you could day trade, you could scalp. I do everything. You guys see I catch scalps all the time. I catch day trades all the time, catch swing trades, because when you have a trading plan, you can fucking do anything. You can trade the 30-second chart if you want, because everything is based off of the grade that you give it. So this is the way how I grade it, right? So first things first, when I come onto the charts, I start off on the weekly time frame. We need to understand in the weekly, are we bullish or are we bearish? So obviously, I was going to ask you guys, are we bullish or bearish? But obviously, we are bearish. And I'm going to show you guys why. A lot of you guys might say bullish simply because it overall looks bullish, but the market structure is everything. And that's what we're going to touch up today and probably next class, because once you get that, you're golden. You don't need anything else. Yes, this market might look bullish because it's going to the upside, but the market structure is bearish. Let me explain. So as you guys see here, we are creating higher high, higher low, higher high, higher low, market structure, higher high, lower low. We've broken the structure points, giving us now a lower high, market structure, lower low. You guys see how we are bearish on this market. My boy Frank over here just tripped out. You guys gonna see Frank's face. You guys see how we are bearish here and not bullish. Type 1 if yes, type 2 if no. Okay, perfect, cool. Trust me, this is about to get not tricky, but I'm about to trick you guys. I'm gonna show you guys how respectfully you guys don't know the proper way how to mark up market structure. Perfect. Okay, so now we understand. We come here, we will type that the weekly time frame is bearish, right? So now we'll go down to the daily time frame to see where we are. So is this consolidation? We're just the market structure. Market structure is all of these elbows right here, right? So a market structure, I should have started off by this, but we'll get to that now. Like this right here, yes, it might look like consolidation, 100%, we're in a range, but what is the structure doing? As you can tell, every single one of these elbows is a market structure. Anything that looks like a clean elbow, one of these things right here, you got to consider it as a market structure. Yes, we are in a range. What do you guys see this? Is this bullish or bearish? Let's see. What is the market structure within this move right here? Consolidation isn't the word, because the structure, the elbows, are they to the upside or are they to the downside? Are we getting a lot of mixed answers? This is beautiful. So this market structure is technically bullish. Yes, we are in a range, 100%, but the structure is to the upside. As you can tell here, we were creating lower low, lower high, lower low, lower high, lower low, higher high, making this market structure bullish, right? We'll get into this right now. I'm about to trick you guys. Don't worry, give me a chance. I just want you guys to see it first in the candlesticks, because if I show you on this, then when I take you over to the candlesticks, it's a little trippy. So I got to start you guys off first with the candlesticks. We'll go to this, and then we come back to the charts, right? So as of right now, we understand that this time frame is bearish. So now, on the daily with AUD JPY, we do the same thing. Yes, it can look a little bit choppy if you're looking at this piece right here. So a very common issue many traders make. This is something that I'll get into, I think, on day 3, but I'm just gonna get you guys a little bit ahead of the game. When they get into the charts, they'll do this. They'll be like, yeah, this right here is a level of resist. Let me see. Yeah, this right here is a level of resistance. This is a level of support. I'm like, yeah, that's cool. But dude, you understand how far we are from these levels? We're so far. You got to zoom in on what matters. Don't even mark off this right here, because by the time price comes here, you already missed the full sell that we're actually looking for. So you got to zoom in to what matters. What matters, I usually tend to say maybe a year, 2 years max, or basically where price is. What are you doing looking at all of this over here if you're not going to be marking off a level of support and resistance over here anytime soon? You zoom in on what matters, and what matters right now is this right here. You got to put it right in the middle of your screen so you notice what you're seeing. Another common issue a lot of traders make is they'll be all the way like this. Like, all right, cool. You can do that when you know where you are already, after you already marked off these zones, because you want to get in close to price, but you can't get in close without seeing what's happening before. Does that make sense? Type 1 if yes, type 2 if no. It's a very common thing. And what I did with the 30-day bootcamp students, it was so trippy. The first couple of days, I'm like, all right, go. Show me what you guys know. And it was just a mess. And everybody was making these common issues. That's the only way I knew how to teach you guys the right way, because I had to see the mistakes you guys were doing. And those are the main things. You guys come onto the charts, look at it like this. Yep, this market is bullish. We're going to the upside. No, the market structure is bearish. Zoom in and where we are. If you notice, I'm not looking further than 1-2 years max. You don't need to, because as you can tell here, the market went from bearish here to then back to bullish, and now from bullish to bearish. right? So if here on the daily time frame, I kind of just need to see this right here, but I don't technically have to look at that much. Me looking at just this much is fine. I just look at it overall. And then you can tell here how we are creating bearish structure. We're creating higher lows, higher highs, so on and so forth. And you can see how this market is bearish, giving us a lower low. I'm gonna get into the details soon, don't worry. Just want you guys to get the overall feel of it, right? So here we are bearish on the daily. Does that make sense? Was it complex? I mean, I don't really go much into it, but you would do it lower low, lower high, lower low, higher high, higher low, higher high. I'll touch up on this, why this is a higher high, lower low, lower high, lower low, and then lower low. You guys see how that's bearish? Type 1 if yes, type 2 if no. Fire. I think we got 1, 2, but we'll touch up on it. One more time. All right. So this market structure went from creating higher highs to now lower low, broke the structure points, now giving us a lower low. I'm gonna touch it up now on the lines, right? So we got the daily time frame bearish, and then now we go over to the 4-hour. What is the 4-hour doing? Again, same thing. Just because you're on a smaller time frame doesn't mean you have to zoom in more or you have to zoom out more. The same thing applies. It's just a 4-hour chart. You only have to, like, if you're not seeing the color of the candlesticks, you're way too far. If you're seeing not even a month ago, you're way too close. You got to find the right medium. You got to find the right, zone. Like if you can tell right here, this is perfect. I can see back about a couple months, and then I can see the candlesticks. If you're like this and you can't see the color of the candlesticks, you're just simply too far. You don't need to go that far. The market goes from here, from bullish to bearish to bullish to bearish. It's crazy. And we'll touch up on that soon. But as of right now, we are overall bearish market structure. You see how this is a lower low. Does that make sense? Simple so far. Type 1 if yes, type 2 if no. All right, perfect. All right, let me just see. All right, cool. All right, perfect. So this is where we would categorize this trade as a 30%, meaning as of right now, since we have the weekly bearish, we have the daily bearish, and we have the 4-hour bearish, this is now 30% towards your trade, which is pretty good to start because you already have a base. So I only use, again, this is very important, I only use the weekly time frame, the daily time frame, daily time frame, and the 4-hour time frame to understand where is the market. Are we bullish? Are we bearish? What the hell is going on? So these 3 time frames are to understand bullish and bearish. Every other time frame from this point on is simply for entry signal or entry structure purposes. What is the 30%? Great question. So every single time frame in sync is 10% towards your grade. So this time frame being bearish, this is 10% towards your grade. This is 10% towards bearish. Bearish. This is 10% towards bearish because we're obviously bearish. So 10%. Let me put this over here. Do you guys still hear me good, right? If the mic is over here, like you guys hear me the same? I just want to make sure I'm not used to this shit. All right, so we got here. Yes. All right, perfect. All right, so then we got here 10% bearish, and then here we got 10% bearish, right? 10% bearish. So meaning this is a great trade to sell. There's no reason you should be taking a counter trend trade on this trade. You should not be looking for buys at all. What confluences do you have to buy? Oh, you're at a support level or you have a bullish engulfing cap. That doesn't mean shit. You got the overall time frames going to the downside. You're only looking to sell. So sometimes there's some trades where, let's say this will be bullish. This would be bullish, and then this would be bearish. So like this meaning you have 2 time frames in sync, one in the middle. So now this would be 20%. So let's say you're looking to sell. Now you have 20% towards your grade. Ideal thing would be to sell. And then if you're looking to buy, you only got about 10% towards your grade because this is the only time frame bullish. So this is where you sit down and you ask yourself, should I buy or should I sell? The most logical thing is to sell, I'd assume, right? Because you have more time frames in sync. So this is the first foundation of your trading plan. Does that make sense? Type 1 if yes, type 2 if no. Fire, fire, fire. Have you guys ever seen this before? Is this helping you guys out already from the start? What do you guys think so far? What do you guys think so far? Very simple. So far, fire. That explains all of your Instagram stories. Yeah, people will never understand from my Instagram story. Very helpful. Make sense? All right, perfect. But this is literally only like the most basic foundation, right? Because you guys need to understand how to properly, like this right now is just getting you guys the feel of the trading plan. But first you gotta understand how to properly mark off the market structure. So in this trade, obviously, since all of this is bearish, this would be a 30% towards your grade. But before we even get into the next step, we're going to spend all of today how to properly mark off market structure. So let's see. So is this time frame right now bullish or bearish, or is it consolidation? Okay. Okay. So if this would be bullish, so there's no consolidation. That's kind of like a trick question. There's only bullish markets and only bearish markets when identifying market structure. Of course, there's consolidation zones, without a doubt. That is 100% fact. The market moves in zones like this. But within here, you would understand that the market structure is overall bullish or all overall bearish. Correct. Higher high, higher low, lower high. Consolidation, when we ask, is this market bullish or bearish? You shouldn't say consolidation. You say that market structure is to the upside, that market structure is to the downside, right? Because you can't add consolidation as a confluence. What am I going to put here? Oh, the weekly time frame is consolidation. No, you can't do that. That makes no sense. It's either bullish or bearish. Okay, so now that we identify that, when we understand that this time frame is bullish, it is 100% mandatory mark off higher highs and higher lows, and you guys will see why. So when marking off higher highs and higher lows, you need to put this to the high, making this your higher high. And then where would you put your higher low? Let's see. Would you put your higher low at point 1, 2, or 3? 1, 2, or 3. You see? Okay. 80% of you guys got it. Okay. Yep, like 70% of you guys got it. Okay, so you guys have to mark it off at the last structure point, which would be point 3. So now that we identify this as our higher low and this as our higher high, we understand anything in between this right here simply means nothing. The moment we break above, this is now the new higher high. The moment we break under, this will now be a lower low. So let's say this does this. This now moves to the higher high. Do you guys agree or no? Type 1 if yes, type 2 if no. Okay, perfect. Now, would the higher low stay at this point? Would the higher low go to 1, 2, or 3? Where would the higher low go? Okay, perfect. Correct. So the higher low goes to number 3, which is the last structure point. So again, if this creates a higher low and higher high, You cannot get, you guys can write this down. Like I have sticky notes all over my computer. You cannot have a higher high without a higher low. It's literally impossible. Like if you have a higher high, you have to have a higher low. It's like you can't have a shower without water. You need a shower with water. Or that's like the most ideal situation, right? Or with soap, whatever. So if you have a higher high, you need to have a higher low. All right. So the only, I'm going to say it one more time. I'm about to trick every single one of you guys. In order for you to have a higher high, you need to have a higher low. So what is this point right here? All right. Okay. Oh, there you go. A couple of you guys got it. It's about 50, 50, 50, 50. Yeah, okay. Yeah. Okay, yeah, we're gonna have to put some work into this. All right, so this point right here is technically nothing. This is not a higher low. I just said it. You can't have a higher high without a higher low. So this is literally nothing. And then this is not a lower high because we're not bearish. This is literally nothing. What about this point right here? What is this point right here? Okay. Nope. We still got a lot of people wrong. I mean, 60-40, the majority of you guys maybe got it. Still a lot of mistakes. So this point right here is not a lower high. The first thing that I said is anything that happens in between these two lines is simply market structure until we break above or we break under. So this is literally nothing because this right here can do this. And guess what? Now we have a higher high and this would be the higher low. Does that make sense? Type 1 if yes, type 2 if no. Fire. Okay, perfect. So it makes perfect sense. Okay, so what is this point right here? Okay. Exactly. Nothing structured. It's nothing because we haven't closed under and we haven't done anything. We're just having a pullback. All right, what is this point right here? Same thing. Okay, correct. Nothing. You sure this doesn't go as the higher low and then this as the higher high? Makes no sense because we haven't done a higher high, so there's no higher low. All right, what about this point right here? What is this point? Okay. Okay, I think like 2-3 of you guys got it a little bit wrong. This is still nothing. We're still within this zone. So you can either mark off your higher high line like this, or you can do a box. I use the box for something else, and I touch up on that. We'll probably do that on day 3 or 4, but you guys can do a box as well. Until we don't break out of the box, we don't shift the market structure. So let's say this does this right now. This does this. Oh shit, what does that mean? We have a higher high. So we have a higher high. We must have a higher low. So this is the last higher low. Does the higher low stay here? Does it go 1, 2, or 3? Okay, we got a lot of, okay, it's like 70-30. 70 of you guys got it, 30% did it. So, and since we have a higher high, you have to have a higher low. You can't have a higher high without a higher low. So this higher low point would go to the last structure point that helped it push it out, which would be this higher low right here. It's going to be this point. So again, I'll do it so you guys get the feel of it. This, let's say this does this, all of this, we understand, we all agree that this is simply nothing, correct? This is just market structure, just creating elbows within the zone. So the moment we break out, giving us a higher high, This has to go to the last structure point that got it out of there. The last structure point that got it out of there is this one. Not this one, not this one, none of these. This is the point that gave it the higher high. And then you just, when you have a higher high, a little trick that I kind of have is you can get this tool right here, like this path tool, and just follow the higher high right back down to where it came from. And the moment it stops in a sharp direction and it gives you like an elbow like this, that is your higher low. Does that make sense? Type 1 if yes, type 2 if no. Perfect. All right, I have a big question here. We'll touch up on that, Rick, I believe, and when we get to the charts. Are you measuring with the wicks or the bodies? This is all of the bodies. But again, we'll get on that when we get to the charts. But yeah, all of this is to the bodies. So it has to touch higher low in order to break a higher high. In order for you to get a higher high, you have to have a higher low. What time frame do you do this? Do this on every single time frame. It's super easy. Like once you get it, it's basically impossible to like unsee it. It's like you know those what are those called? Those illusions. Once you see the illusion, you can't unsee it. So like let's say there's a hidden, I don't know, cat in the picture. You can't ever see it because nobody's showed you how to find it. But the moment they're like, yo, it's right there, you can never unsee the cat. It's the same thing with this. Once you guys learn how to do this, you can't unlearn how to do it. It's kind of impossible. So this is the most important thing, I think, when it comes to trading, because this way you understand where the market is. Here, you're not going to be going against the trend. You're not going to be getting wicked out anymore. Like none of this shit's going to happen because you understand where you are. But this motherfucker with the analogies. Yeah, I feel like I should write a book. Can you write a book on analogies? Can I sell analogies? Can I get hired to do analogies? I feel like I'm pretty good at them, bro. But whatever. So we understand that this is the higher high, and we understand this is the higher low. We'll do it one more time just so you guys get the feel of it. You guys understand it. So let's say this does this, and then it does this. If this is the higher high, you move it up. And then if you want to find the higher low, just get a drawing, get whatever you want. Just follow it right back down to the last point. And the point that it completely turns away from the elbow, that is your higher low. Does that make sense? Type 1 if yes, type 2 if no. All right, I see you guys are pretty confident. All right, shit's about to change right now. Would you put the higher high, higher low lines on multiple times? Yeah. But again, like all of that, we'll touch upon that in the charts. That's part of chart hygiene, all that stuff. No worries. All right, so let's delete all of this right here. So let's say this is our higher high, and then this is our higher low. Let's say we get something like this. Once we get something like this, oh shit, now this is not a higher high anymore, obviously. So what would this point be right here? Correct. So now this point right here changes from a higher low to a lower low. And then same exact example that we just showed in the previous one. If you have, again, write this down next to the other one. The first one is, in order for you to have a higher high, you need to have a higher low. And then in order to have a lower low, you need to have a lower high. It's the same thing, just flip it around to bearish to bullish. You cannot have a lower low without a lower high. You cannot have a higher high without a higher low. Type 1 if you guys got it. Type 2 if nothing. This guy's like, holy shit, that is true. Yeah, bro, it's so crazy. It's so simple. And because again, you guys remember, we're like in step 1. And nobody knows this step 1. So everything from this point after, they just fuck it up. Because if you don't got the first point right, everything you do from that point forward, it's like you're building, here I go with the analogies again, bro. It's like you're going to build a house without the proper foundation. So when you start building up, bro, that's just gonna start shaking. You get the winds, you get all that stuff. Bro, legit, most simple, but I didn't know this after 1.5 years. Yeah, bro. So lower line. Okay, yeah. So in order for you, this is for Andrew. In order for you to have a lower low, you need to have a lower high. You cannot have. Let me do this. So you guys take a screenshot. You guys take a screenshot. You can not have a higher high without a high low. You cannot have a lower low without a lower high. You guys can take a screenshot. It is not more complicated than that. It's very simple. It's literally 2 words. Very simple. And yes, you're going to be marking this off on weekly, daily, 4-hour. But again, we'll touch up on that later. Okay, so this is where now, if you need to mark off your lower high, how do you do it? You just follow the move, little thing going on. This is the point where it makes a sharp turn. So obviously, this would now be your lower high. Type 1 if that makes sense. Type 2 if you don't understand how that was the lower high. Fire, fire. A bunch of ones. Perfect, right? Cool. So now we're bearish. So this is where you would now expect to have a lower high, lower low. So this moves to the lower low because now it's the low point. So where would the lower high? Would the lower high stay here or would it go 1, 2, 3? Where would the lower high go? Perfect, perfect. You got a couple ones that are not wrong. So again, if you have a lower low, you can't find the lower high, which is kind of impossible because you need to have a lower high in order to have a lower low. You just follow the little snake thingy, and the moment where it makes a sharp turn, that is your lower high point. So what is this point right here? Okay. Okay. Perfect. Perfect. See a couple wrong ones, but this is nothing. We haven't broken out of this zone. And so we don't break out of this zone. We are still bearish. As long as we do this in here, all we want the moment we body close under or body close above is when we shift the market structure. What is this point right here? Perfect. Nothing. This is not a higher low. This is not a lower, nothing. It's not a higher low because we don't have a higher high. You guys see that, right? The simplicity of it. You guys can mark this off as a higher low if you didn't know the original lower low and lower high. You guys see how that can be easily mistaken by not understanding the proper market structure. You guys see how crazy that is? Because this is what happens. You guys will just be trading this right here. You guys will just be zoomed in. Damn, it doesn't let me zoom into that side. But you guys will just be zoomed in on this right here. And you're like, yeah, fuck it. This shit's bullish. This is a higher low right here. No, you're not looking at the overall picture. The overall picture, the structure is bearish. Type 1 if you guys got it. Type 2 if not. This is crazy. Trust me, we're only getting started. This is like by far very simple. I can only imagine what's in the guided boot camp, bro. What's inside there is this is crazy. So now that we have a nothing, when we have this, this now moves to the lower low. Where does the lower high point go? Does it move to point 1, 2, 3, or 4? Perfect, 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 perfect. So this would go now to the lower high point. You guys feel a little bit more comfortable identifying lower highs and lower lows? How do you guys feel? Easy to understand, comfortable, mind blown, fire, fire, fire. I feel retarded. Nah, bro, you're good. Don't worry. What you guys gotta do now is just whatever you guys had learned in the past, just take it out, throw it to the garbage. It's cool, but we're starting from scratch. I'm gonna get you guys back to 100%. You guys gotta just not, I mean, you guys can kind of try and bring it. And this is something that I don't want to say I tried, like one of the 30-day bootcamp students, but he was so stuck on this one thing that he learned because he paid somebody like $5,000. I don't know who he paid $5,000 for, like a one-on-one. And he taught him, bro, this is how you do it. It is. I'm like, all right, bro, go. Make it make sense. How is this the higher low? Go. Just make it make sense to me. He's like, well, if you look at it this way close, I'm like, there you go. You're already wrong. You're not looking at the overall move. Of course, you're going to think it's the higher low if you're only looking at this. But you're not trading, you're trading everything. Does that make sense? Like it's make it not make sense. It's basically impossible because there's just no other alternative. Like, bro, there's no water. You're not showering. You know what I mean? Like, you can't just shower by just scrubbing yourself. You need the water to come down. So a little trick that I shouldn't be showing you guys this now, but I'm just going to show it to you guys. Okay, I'll just show it to you guys now. I've showed it in the past. Some of us are better sellers than buyers. Some of us are better buyers than sellers. Some of us can identify lower lows and lower highs better. Some of us can identify higher highs and higher lows better. If you're having trouble to identify either or side, you just simply right click here, flip the scale, and now we're bullish. Or you flip the scale, and then now we are bearish. This is something that I kind of do at times when I kind of don't understand where we are. I'm just simply confused. Like I get confused as well. And I simply, let's say I can't really identify this as bearish. I'll just right click, I'll invert it, and tell me this doesn't look a lot cleaner now for a buy. Now you can see this buy a lot, bro. My boy Frank, bro. I can like highlight your facial expressions, bro. They're fire. So you just flip it and tell me this doesn't look fire right now for a breakout, retest to go to the upside. You got me? So there's just some things that look better than others. So 1 second. Let's see this right here. So yeah, you just right click on this line right here, and then there you go. That's pretty much it. You see now how the cells, they look like whatever, didn't look that clean. So maybe the majority of you guys are better buyers, majority of you guys are better sellers, whatever the case is. Just a little trick for the future. So what we're gonna do now is I want you guys to guide me. Hold on, let me think. Am I missing anything? Okay, yeah, I am missing something, but I'll touch up on that in next class. Okay, so this is just understanding market structure. So now we're gonna go to where it matters. Let me actually pause my screen really fast, and let me get this right here. All right, bet. So, could you guys see my screen? All right, perfect. All right, perfect. So I want you guys to tell me whether we're bullish or bearish. So let me know what to do. Tell me what do I have to do. So just type it up. I don't know anything. I already told you guys, like, you guys should know into this point right now. Okay, all right, there you go. A couple of you guys got it. Richard got it. Justin got it. All right, perfect, perfect. So first things first, zoom in. So you guys probably already saw the market structure, but before that, I was close. So first things first, zoom in. Is this good enough? You guys see good enough here? No. Okay, perfect, perfect. So zoom out. So we're gonna zoom out enough space. Is this too much, or should we get closer? Okay, perfect. So it's obviously too much. We don't need that much. All we need is about a year to max. So I feel like around this zone is perfect. So are we bullish or bearish? Okay. I say about 80% of you guys got it. So it's very interesting. Okay. So this market right now, we are technically bearish. So I'm just going to bring out my line. We have lower low, lower high, lower low, lower high, lower low. Meaning if this is the lower high point, this is the lower high. And then if this is the lower low, we put it at the bodies. We haven't broken out, making this still bearish. You guys are seeing that, right? You guys are seeing the importance of that. Type 1 if yes, type 2 if no. You're seeing why these lines are so essential. So kind of what I highly recommend every single one of you guys to do is to get your chart, get your lines, and then go to visibility and leave this line only available on the weekly. So you can take it off the minute, hour, all of those time frames, and leave your lower high and lower low after you already identified it, only available on that time frame. So whenever you come out, so because like if I do this and I go down to the daily, now I'm just tripping out because I think this is the lower high and lower low. I'm like, there's something wrong. So I will get this line, make it visible only on the weekly. And when we go down to the daily, see how we can't even identify it. It's not there anymore. Obviously, I didn't do it to this one, but for just that example, we come back out to the weekly, we understand where the lower high is. So this is a tip that I recommend all of you guys to do. Keep you guys in check. If you don't put these lines, forget about understanding where the market is. You're not going to skip this. I still put these lines up to this day, and I've been doing it for 4 years. Don't try to not do this. There's no reason to not do it. It's only going to benefit you. Skipping this is you're just skipping your way to success. It's just not going to happen, right? So we understand here that the weekly time frame is bearish. All right, lit. So what we're going to do is we're going to make this visible only on the weekly. And along with this, we're only going to make it visible on the weekly. So we go down to the daily time frame. And are we bullish or bearish on the daily? All right, there you go. There you go. A lot of you guys got it. We got to zoom in. We got to zoom into price, zoom into what matters. My eyes are hurting from too far. You got to zoom in, get in about a year, 2 max. You don't need any more. So are we bullish or are we bearish? All right, let's say about 80% of you guys got it. Confused, perfect. If you're confused, we're gonna make you not be confused. So let's say we start off from this point right here. We have lower low, lower high, lower low, lower high, lower low, lower high, lower low. You see how we body closed above, making this a higher high, body closed under, lower low. All of this is simply market structure. We have higher low, higher high, higher low, higher high, higher low, and higher high. So this would be our higher high. So let's make this higher high. And then where would our higher low point? Well, first of all, for those of you that did not understand why it was bullish to bearish, is it a little bit more clear now? Okay, perfect. So where would our higher low be? Would our higher low be at 0.1 or 0.2? Oh, I caught half of you guys, bro. Half of you guys, literally almost all of you guys. The higher low is not at 0.1 or it's not at 0.2. It's at 0.3. You guys see that? So if you don't know how to understand where the higher low is, do the little snake trick. Get the little snake, follow it, follow price back. The moment we, oh shit, that was terrible. The moment we slip, the moment we make a sharp turn, that is our elbow making this our higher low. Does that make sense? I literally got almost every single one of you guys. That's crazy. Very, 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 very simple. Type 1 if it looks clear now, type 2 if it doesn't. Perfect, perfect, perfect. All right, so this is now the higher low. Let me find this on the thing. So now we understand that we are daily is bullish. So now we go to the 4 hour. We got to understand what the 4 hour is doing. Again, we got to leave this. Actually, what is this point right here? What the hell is this? Correct. Literally nothing. This point is nothing. It's not high or low. It's not anything, because this right here can do this. It can do this. It can do this. We don't know what it's going to do. As long as it's in here, it's nothing. First, we're going to go down to the 4 hour. And then in the 4 hour, we got to understand, are we bullish or bearish? So obviously, you guys already know you can't see the markets from this far. You got to zoom in, correct? Zoom in. You don't got to look more than couple months max. So in this chart, let's see, are we bullish or are we bearish? Oh, let's see, let's see. Oh, this is going to be interesting. And I have a trick for you guys on how to identify if it's bullish or bearish if you guys can't see it clearly. But this is okay. Flip it. All right, fair. That's a good request. So I'm going to flip it. Might be a little bit tricky now as well. If you guys don't see it good, it's, yeah. All right, so this right here is technically bearish. Why is it bearish? Because let's say we start off from here. So it'd be our higher high, higher low, higher high, higher low, higher high, lower low, structure. Again, if this is our lower high point, and then this is our lower low point that didn't body close above. So this is simply just structure. The moment we body close above, that is now the higher high. And then this is now the higher low. Does that make sense? Is that clear? Do you guys understand? 100%. Perfect. Perfect. Okay. So we keep it going. Is this a lower low right here? Is this a lower low? 1 yes, 2 no. Oh, a little tricky, a little tricky. You guys 100% got to come back and watch this recording 2-3 times. Even though I'm gonna touch up on it with you guys, obviously, you know, it's very hard to see something new and expect to get it right off the bat, but highly come back to this and you guys will get it. So this is nothing, because again, we haven't broken out of this line. We haven't broken out of this line. This is the higher high, this is the higher low. The moment we close above, let's say this is our new higher high. So we would mark this off as our higher high right here. Our higher low, let's find it. We do a little snake trick, Technically, this isn't really a sharp turn, so it's not an elbow. This right here is a sharp turn giving us our elbow. You guys see the difference in between the elbows. Could have been a very common mistake and it could have completely thrown your trading the whole entire way. So this as of right now would be the higher low, this point right here. The moment we body close above this line, now this would be the higher high, and this would now be the higher low. So then what happens? We body closed under, making this bearish. For those of you that said bullish, you guys see why. Does it make sense now? Is it a little bit more clear? Type 1 if yes, type 2 if no. It's a bit tricky, right? It's, again, you guys got to come back and watch these recordings like 1000%. Yeah, it's very tricky, but as soon as you see it, you can't unsee it. So tell me now that I take off these lines and tell me how you can't, like, now you just know that it's bearish. And let's say that I flip it around. Now you just know that it's bullish. You're literally seeing the breakout happen. Lower low, lower high, lower low, higher low, higher high. It's crazy. Like once you see the market structure, you basically can't unsee it. This is fire. I actually didn't okay, so that's a great question, Miguel. So Miguel asked, I didn't know one candlestick can be an elbow. And again, it goes back to the little snake trick. This is your higher high. You start doing this right here. Boom, that is a sharp turn. That is no longer like it's no longer a snake. This is a fucking boomerang or whatever you would call it. I don't have an analogy for that yet, but I'll figure it out later. But it's not a snake, you get me? So you simply just move it, you move on to the next one. So as of right now, let's say we were to take this trade. Again, remember, all we're doing right now is understanding, are we bullish, are we bearish? Like what the fuck is going on? So as of right now, this right here would be 10% towards bearish. This would be, actually, let's do it like this. This would be 10% towards bullish. This would be this way, 10% towards bearish. And then this would be 10% towards bearish. So now you got to ask yourself, you simply sit here and you say, all right, let me figure this out. What makes more sense? That's all you got to say. What makes more sense? And I can guarantee you would make more sense to take a sell because you have 2 time frames in sync versus not. But this is just the start of it, because you need to understand where you are within these bullish and bearish moves, because we understand if the weekly time frame is bullish, let's say this time frame right here is the weekly. Let's say this time frame right here is the daily. And we're going to touch up on this on the next class, because I really want you guys, I don't want to give you guys too much because then I confuse you guys. I do want you guys to come back and then watch this recording 2 times at least before we get on to the next class. And then let's say this is the 4-hour. You see how they're all different, but they all have a purpose. Like you're in the same spot, but you're in the same spot, but in different places on the move. I'm not even gonna confuse you guys with that yet, right? So I'm gonna save this for the next class, right? Because this is like the other super important thing, because you can have all 3 of these time frames bearish, and the most ideal thing would not be to sell, as crazy as that might sound. And that's the importance of understanding where you are, right? So as of right now, you guys understand everything we've done today, which is identifying whether we're bullish and bearish, how, why, when, everything. Type 1 if yes, type 2 if no, if you guys just want to drop it in the comments. Perfect. Super fire. It's crazy. I deserve what? Lost it. You deserve a cake pop. It's been a while. I haven't had a cake pop. Wow. You're explaining very well. Thanks for everything. I appreciate it. 30-day boot camp. Yeah, 100%. Yeah, and all of this is just, yeah, the guided boot camp is everything. Why is 30% the total and not 100% or like 33? Okay, great question. So let's say right now this trade would be 20% towards your grade. How are you going to give this 100% if you don't have entry signal, shift to structure, buying and support and resistance, bullish engulfing, bearish engulfing, time zone, risk to reward? There's so many other things that go into the trade that make it 100% or 80% or 90% of the trade. This is just the start of it, of your whole entire trading plan. Does that answer your question, Karen? The snake changed the game for me. Yeah, it's the foundation only. 30 goes towards the grade. Yeah, correct. They're taking me on a gym day. Hey, yo. I haven't been hitting the gym much lately. Yes, this is being recorded. That would have sucked if this would have not been recording. Oh, that's another thing, guys. You got to remind me. Something that we forgetting, and I'll just start. So you got to remind me. So as of right now, we understand that we are bullish, bearish, and then bearish on the 4 hours. So right now, if you were to take this trade, by starting off, you would already have 20% towards your grade if you were to be taking a sell, and then you would have a 10% trade towards your grade if you'd be taking a buy. Now, would the buy trade still play out? For sure. Would the sell trade still play out? For sure. we know that the market is either going to do two things. And I can guarantee you this, and I haven't found the market do anything else. The market is either going to go up or it's going to go down. We're just figuring out how it's going to have more probabilities of going down versus up, and obviously vice versa. That's all we're doing. From this point right here, if I were to build this full entire trading plan, this right here would have 60% of going down versus going up. So you take the trade. It's literally like the roulette table. It's black or red. You know it's going to be black because the table is tilted a little bit more this way. There's a more chance. That's all we're doing, because it's going to go up or down, black or red, and we just figure out how to get in. So this is today's first